Hey guys, this is Eric with Low VA Rates, trying to get a quick video out to you. What's interesting is, number one, we love that you guys enjoy our videos so much on YouTube. We find daily there's comments, interaction, back and forth. We love it. It means it's actually working, so we appreciate that. In like the last month, we've had more and more veterans than ever come to us either through YouTube or some other channel wanting to do a VA one-time closed construction loan. And we don't want to do those right now. And we don't think it's in the best interest of veterans. That's not to say we don't want to help you with construction loans or VA lending and that you shouldn't be building a house. So keep listening. Now's a great time to build your own home. It's exciting to build your own home. My wife and I built our very first custom home, if you will. We've owned a couple of homes, but we built our first home about 3 years ago, and it was an amazing experience. We have an old video that we're going to keep up where we were introducing veterans to the one-time closed construction loan. And at the time, an employee of ours by the name of Tim Lewis was giving all sorts of benefits to doing it. And there are benefits that were much greater back then than they are now. But here's why low VA rates, as of right now, what's today's date? It's like August 14th or 15th. At this time, if you want to do your mortgage with low VA rates, we are not going to do a VA one-time closed loan. And I'm going to explain why. And if you decide, well then, forget you guys, as much as we like your videos, we're going to go find someone that does a one-time closed construction loan. You're welcome to do that, but let me forewarn you, you will regret it. You will come back to this video and you will comment, I should have listened. So give me 2 or 3 minutes of your time. Here's why we don't want to do them and why we think almost every single lender out there who suggests they do them is not a good opportunity for you, or it's not smart for you to do. They're difficult. Okay, yes, the VA allows for a one-time closed construction loan, and it sounds great. I only want to close one time. I'm only going to have closing costs one time. It's easier. I can lock in today, and it doesn't matter what interest rates are going to be 6, 7, 8, 9, 12 months from now when my house is done. That all sounds good, but we've done them. We did everything we could to become experts at them. They frustrated the heck out of our veterans. They left a bad taste in our veterans' mouth. It frustrated the builder. It just wasn't a good experience. But it's more than just that. And I promise you, it's not just because low VA rates wasn't good at doing them. We've talked to many veterans who have regretted doing VA one-time closed construction loans. Probably the biggest reason why you shouldn't do them right now, other than the bad experience, is interest rates seem to be going like this, okay? Interest rates are going down. And if you ask anybody that understands the economy, though none of us have a crystal ball, and this is just an opinion, interest rates should continue to go down over the next year. Our current president, whether you like him or not, is very adamant of pressuring the Federal Reserve to cut interest rates larger and faster. The economy seems to be signaling that we might be going into a recession, and most people are going to tell you interest rates are going to be lower in the future than they are today. So one of the old benefits of the one-time closed construction loan was that interest rates seem to be going up. So if you locked in a loan today during the beginning of your construction process, you didn't have to worry about rates being a point or 2 points higher when your home was done. You were taking today's rates. Now, because you were asking a lender to give you a fixed rate or a locked-in rate for an extended period of time, you were always getting a higher rate than you would have if you were getting a loan locked for a short period of time. So why take a higher rate than what's going to be there in the future, likely, and why take a rate that by its own design is always higher because you're asking the lender to keep it locked in for 6, 8, 9 months? That's probably economically one of the biggest reasons to steer clear of doing a one-time closed construction loan. You're going to end up with a higher rate, most likely. I already talked to you about how difficult they are, but let me now give you good news. I'm going to look for my eraser here. There's nothing wrong with doing 2 mortgages. We refer to that as a traditional way of doing construction loans. So I'm going to erase this real quick so I have a little bit more room. I don't know that I have a whole lot to draw, but traditionally, and this is what my wife and I did when we built our house, it's a 2-step process. Number 1, you get your standard construction loan, okay? Just get your standard construction loan. The reason why you want to get a standard construction loan is because 99 out of 100 builders in your demographic, in your neighborhood, that's what they're used to doing. They don't want to go through all the red tape and the loopholes, and there are lots of them, to do a VA one-time closed construction loan. Number two, if they're not an approved builder with the VA, they got to do additional paperwork. If you just get a standard construction loan, it's way easier. You go to your builder, you tell them you want to build a house, who's your construction lender. When you're building a house, people like to work with the people they're used to. The builder's going to get his money quicker, the subcontractors are going to get paid quicker, and everyone's going to be happier. And this is a very low adjustable rate mortgage. 9 times out of 10, if you get a construction loan, it's for a short period of time. 6 to 12 months is what it normally takes to build a house. Your bank gives you a nice low rate. Let's just say it's down in the 2s. Generally speaking, you make no payments on that construction loan, and the interest just accrues. I hope I got my math right today. Okay, your interest is accruing. So let's just say, for example, it's going to cost you $100,000 in labor and materials to build a house. We all know it's going to cost you more than that. But over a 6-month period, maybe you're going to incur $2,500 in interest because you build your house really quick. It's a pretty cheap house, inexpensive house. No harm there with the vocabulary choice. It's an inexpensive house at a low rate, and you didn't borrow money for long. When it's all said and done, your interest accrued for $2,500. So you're going to get a loan for $102,500 from us. That's where your VA loan comes into play. When all the construction's done, come to us. We'll give you a VA loan to pay off the construction loan, and we'll give you what rates are at the time. Now there's no stress. That's what we do. That's what every VA lender in the country does. Listen, I don't normally like to name my competitors, but call Veterans United. They're amazing at what they do. Ask them if they'll do a one-time closed construction loan. Call USAA. Call Navy Fed. These are the biggest names in the VA industry, along with low VA rates. Those are some of your top lenders out there. None of them do one-time closed construction loans. So save yourself the stress. Save your marriage, because building a house is already stressful enough. Go the standard route. So your first loan, standard construction loan. Your second loan, which I just referred to, is referred to as your VA. Make sure that VA takeout, or just your normal VA loan to take out the construction loan. If there's questions, comment below. We respond to them daily. You can give us a call, but I hope this, if nothing else, has made you rethink this grand idea that you want to do this famous VA one-time construction loan. You don't. Trust me.